Even there. Good morning, ladies and gentlemen. You will certainly hear my greeting, but I may not hear your response, but I want to believe you have responded. Because me have ability to reach you by sound, but you have ability to reach me by a smile or a wave. Is anybody seeing me or hearing me? Oh, great. Now that you have hands, you will allow us to let you go with your hands and pick a cup of coffee out there. This is the Oxfam event, just in case you're wondering whether you are in a different event. I've seen several. And this event is about taxes. Those who want to pay taxes to begin with, and those who want to benefit from the taxes they pay. The rest we shall discuss is the subject matter of this meeting. Fred Muhumza is my name, in case you don't know. And I will be the moderator for the session. The session should have begun about 30 minutes ago and starting now with a cup of tea. So if you're sure you've greeted your neighbor on your desk, you can move and pick a cup of tea. If you haven't, please do that. But as you go to pick a cup of tea, and if there is a neighbor on another desk that you haven't greeted, this is the time as you go for a cup of tea, pass by. It's still time to say Happy New Year. Some of us, the time to say happy birthday has already passed. So please don't say that to me, unless you'll be saying for 2024. Don't ask me about the cake, because I'll also ask you about the same. Tea is served. Let's go and pick it and bring it back on our tables, and then we can start. As per our program, we should be starting in 5 to 10 minutes, and we are still on schedule. Thank you very much. Those who haven't picked tea, you can pick tea, and any other thing that you find on that table. Thank you. Allow me to welcome you once again to this meeting. The subject remains as per your invitation notification. I don't want to say invitation letter. These days, there are many ways you get invited. So let me be keeping myself on the safe side to say your invitation notification. This is the Oxfam event. It usually happens around this time of year of the Davos meeting somewhere far away. But Oxfam is always kind enough to bring it home and bring the conversations home. And one thing I know about the reports of Oxfam that come out at this time of year, they make more impact, at least in terms of what we listen to and what really we discuss during the Davos conference. Many of us may not even know what conversations are going on or have taken place there, but at least we know the percentage of wealth that has gone to what percentage of the population. Thank you, Oxfam, for coming up with that innovation at global and local level. And where there is inequality and we want to join together against inequality, matters of tax come in. Because some inequalities are naturally built in the system. And the only way to address them is through taxation. You cannot stop Ronaldo earning, I don't know how much money, I've forgotten the figures, per minute, because he's a footballer and he's playing in the rich man's area. But the only way you do justice to that inequality is by taxing Ronaldo, and that is one side of the coin. Then you flip the coin and spend on where those who need it are. So this conversation will be looking at those two sides of the coin. As I informed you, Fred Muhumza is my name. You have your program before you, or at least somewhere closer to you. Our program begins with the introduction, which I have done. That was supposed to be up to 9:15. Now we're going into the welcome remarks. And I request you to allow me jointly with yourselves to welcome Madame Jane Narunga, the Country Director, Siatin, to give us the welcome remarks for the day. The red microphone stays with me. The green one goes to it. It has no political implications at all. But I'm just trying to match my shirt. My microphone is red.
That isn't red, that's pink.
You see, now she went to school. I didn't. Me, anything not green is red.
Okay.
Jen.
Good morning, ladies and gentlemen. Good morning. At least I saw people lining up for tea and coffee. So I think that the stomachs are okay. So good morning. Good morning, comrades. On behalf of the organizers of this symposium and on behalf of the partners who undertook the research, we are going to discuss today. That's Oxfam, Tax Justice Network Africa, FEMUNET. I would like to welcome you warmly to this conversation. It's a conversation which we are going to have today. And this conversation is about, it's a tax symposium, tax conversation, is how we can be able to widen the tax base by bringing in looping in more high net worth individuals, people who are rich, people who are rich, and also who are maybe higher than us in terms of income. This symposium is coming at the right time. As you all know, our economy has really been battered by so many things: the COVID pandemic, the climate change, the debt, the Ukraine war, name it, everywhere there are problems. And these have led to a shrinking economy, and at the end of the day, we are looking at increasing poverty. But at the same time, we are looking at concentration of wealth among very few people. And this phenomenon is not just in Uganda alone, but it's global, as my brother Francis will be able to show you. Also in the report, this will come out, that for the first time, there is a concentration of wealth, but also deepening and increasing poverty. And that's what we call inequality. Inequality is increasing. The poor becoming poorer, the few rich are becoming richer. And for us, as the partners at Tax Justice Alliance, we are saying this can't go on. Something has to be done. This conversation is also coming at a time when government is not making ends meet. The income is not meeting the expenditure, and that's why we are going into debt. We are going into debt. So how do we ensure that we have more income? We bring more people in the tax bracket. So this is also one of the issues we are going to discuss today. For me personally, we have been looking at the budget framework paper under the CS bag. My brother Julius is there. And you can see the struggle, where should this money go? Agriculture hasn't got this one, capital development, education, we are looking at a very, very limited amount of money. And today the question is on the table is, how do we finance our development? We can't do it from debt. That's not sustainable. It has to come from us. So those are some of the issues we are going to discuss today, especially the question on how do we ensure that we raise resources fairly and equitably, and that every one of us pays their fair share of taxes. We'd like to welcome you again. Let us debate objectively, because I can see our brothers and sisters from Uganda Revenue Authority, from government. We need to give them some real issues to take back to their offices. I would like to once again thank Oxfam. Oxfam has really been good at bringing those global issues back to us, because this campaign around taxing the wealthy is a global campaign. It isn't our campaign alone as Uganda, it's global. And we want to join forces with like-minded organizations to make sure that there is fair and equitable taxation. So I welcome you, and I wish us, all of us, a fruitful deliberations. Thank you so much for coming.
Thank you very much, Jen. And I couldn't go through all the other names that she has listed of the parties responsible for the content that we are going to be discussing, because that was supposed to be part of her docket, to thank those who participated in the study, but also to thank Oxfam for convening this meeting jointly with the partners. And the conversations are about to begin. But let me first call Francis, Oxfam itself. Why don't you come and make us feel at home so that we know we are not about to be chased or evicted or droned off.
Thank you so much. Good morning, ladies and gentlemen, and everybody. I was reminded that it's not too late to wish somebody a happy new year. I know 2022 was as difficult as the other years that we have been through. But the fact that we are here today, it means that we need to congratulate ourselves that perhaps we have been the resilient ones. I'd like to take this opportunity, everybody, to appreciate representatives from the different ministries, Ministry of Finance, some members of parliament who are here, friends and colleagues from Uganda Revenue Authority, my counterparts from the civil societies, organizations, and the civil society, private sectors, my friends from the media, and our partners. Thank you so much, and I want to welcome you once again. My name is Odokorach. It means something has become bad. Yeah. Where I come from, you could easily tell that probably I'm not the firstborn. The firstborn normally have good names. Like Aber means the good ones. Omara means the loved ones. Then as you reach down the lane, it becomes Rach. Rach means bad. So probably my mother was communicating something to the clan, I suspect. But probably they looked into the future and they predicted that the inequality would worsen. So, so I want to thank you, Jane, and all the colleagues, my colleagues from Oxfam, who have worked incredibly hard. The teams are here, they're all around here. Bwana Joseph, who is heading our governance kind of pillars. We have Charles, who are around here as well, and many other colleagues who are here. Thank you so much for the partnership, because alone we can't do it. The issues we are dealing with are very complex. So I recognize that. Ladies and gentlemen, I would like to, of course, also express my appreciation that this conversation or the symposium is happening at the right time. I think the moderator has ably stated it in a very clear way, that it is at the right time because there's a lot of debate and a lot of issues that we think we should continue to challenge in 2023 and beyond. But it's also coming at a time when the world leaders, key civil societies, organizations, and business executives have been returning from that beautiful country, the Switzerland, where the World Economic Forum meeting was taking place. And of course, we know that whatever they discuss there has got a bearing on my aunt, who is a farmer somewhere in the village here in Uganda. And of course, it also has got a bearing on some of the super rich people who are continuing to be richer. So for us, this is a very important time to have this conversation. For Oxfam, that I represent in Uganda, it's a global opportunity about the growing extreme inequality in the world. So this year, Oxfam was quite creative, and I think we really got it right, and gave a report titled Survival of the Richest. We are always used to hearing this, that survival of the fittest. But now I think it is about the survival of the richest. And in Oxfam International Executive Director's words, she said that while ordinary people are making daily sacrifices on essentials like food, the super rich have outdone even their wildest dreams. The richest 1% have grabbed nearly 2/3 of all new wealth, worth about 42 trillion US dollars, created since 2020. I think some people don't sleep. Those guys who like taking opportunity, they do not sleep. When the world was locked down, they were very busy, doubling their wealth. And of course, what we have seen that the bottom 99% of the world continues to languish. So according to the World Bank, extreme poverty increased in 2020 for the first time in 25 years. Now that's significant. You could see that the super rich are going up while the numbers of extreme poor is increasing. Now, the billionaires class, of course, is $2.6 trillion richer than before the pandemic. Even if the billionaire fortune slightly fell in 2020, after their record-smashing peak in 2021, the world's richest are now seeing their wealth climb again. So we are likely to see in the next report that they are going up. But at the same time, about 1.7 billion workers now live in countries like in Uganda, where inflation is outpacing wages. And at least over 820 million people, that's to say roughly 1 in 10 people on earth, are going hungry. We know that in East Africa, in Somalia, South Sudan, in Karamoja, Ethiopia, we've been having really, really serious hunger crisis going on. So as a country, we have faced many unprecedented crises, from floods, drought, and elevated persistent inflation, with food and energy prices going up every now and then. Although I have seen recently that the prices of the fuel is beginning to come down. I don't know, Julius, whether you think the trend is going to remain that way. Somebody was making a joke that who knew that one day diesel would overtake petrol. I think it is persisting. Yeah, so I hope that this trend will continue to go down, even if we don't have a substantive governor yet. I have not said much. Yeah, so going back to some of the key points here, of course, we see that despite all these inflationary tendencies that we are having, there is less expansionary fiscal policies in this country. So this has widened the inequality gap, and it needs urgent attention if we are to build a more inclusive future, support a just recovery from the past shocks, and build resilience to future possible shocks. So I think we will continue to call upon the government to continue taxing of the super rich, the big corporations, as the door out of today's overlapping crisis is just simply that. So in 2022, Oxfam and our partners, we presented a fair tax monitor study showing how Uganda's reliance on indirect taxes makes the tax system regressive, with the indirect taxes disproportionately affecting the low-income earners, especially women. From that paper that we will be presenting and discuss with you today, we believe that by increasing tax on the richest individuals, in our context, we are referring them as the high net worth individuals, the poorest members of the society stand to benefit twice. How? One, from reducing the pressure from the regressive taxation, which hits them the hardest. And of course, improving public spending. That is if we are spending in the right sector. Sometimes we are very fast at approving these other budgets that comes, but the other important sectors don't get a lot of allocation. In that way, then, we will not benefit, especially the low-income earners. So we acknowledge taxing the wealthy or the rich is a controversial topic, of course, that continues to be widely debated. But, of course, the studies have supported this course, such as the Oxfam argue that it is a fair way to reduce income inequality and to fund important public goods and services, such as education, healthcare, and infrastructure. The rich or the wealthy have a greater ability to pay higher taxes without it significantly impacting their standard of living. So, in all fairness, we will need to continue to tax the super wealthy. Luckily, in Uganda, and I think colleagues from Uganda Revenue Authority, of course, they will agree with me that taxing high net worth individuals is an initiative that has been here since 2015 by the Uganda Revenue Authority, with the support of the government and, of course, a lot of influencing from civil society organizations. We saw from the figures that within the first year of this initiative, Uganda Revenue Authority registered increased revenue collection by about 19.7 billion Uganda shillings. That's about 5.3 million US dollars. And by the end of the year, 2021-2022, the figures that we were able to access shows that about 160.9 billion shillings have been collected. Now that's significant. Only the high net worth individuals, or the super rich in our context also. This and more progress is an indicator that it is practically and politically feasible to widen Uganda's tax base. I want to underline this word, practically and politically feasible. Because we know that there are many things that are practically possible, but politically, I leave it to you to digest in our context. So we hope that through the discussions that we'll have today, we could also hear more and probably see how that can be grown as part of widening of our domestic resource mobilization as a country. Ladies and gentlemen, I wouldn't wish to take a lot of your time because I'm also acutely aware that we are late. We have started this meeting a bit late. But allow me to extend deep appreciation to all of you for making the time to come so that we can have this conversation. And I do hope that whatever will come from here will continue to inform how Uganda can bridge the gap or reduce the extreme income inequality that we are seeing in this country, but also improve on the social services delivery in this country. But I want to add the third one, that also, as a people, we will continue to increase on our vigilance to hold the people who are misusing and abusing our resources I cherish the people who have of recent used the social media wisely so that we can expose and shame the people who are misusing our money. I thank you so much, and I would like to declare that this symposium is opened. Asanteni sana.
Thank you very much, Francis. He's raised interesting conversations. We want to tax the big fellows, but not to pull them down, because they need to remain there making some money, but as long as they can share with us, there's no problem. Somebody works with a large taxpayers department. We don't want to leave that space empty. And then we all go down to the small taxpayers department. I don't know that it exists. But it raises things when you see fuel prices coming down. As sometimes we say, you may want to grow fat or grow thin, and you actually begin to realize your objective. But don't celebrate because it might actually be the disease that is doing that. So what is bringing fuel prices down is an upcoming global recession. That very many people are no longer demanding fuel for the same reasons that they were demanding it for. So I'm not sure whether the lowering of the fuel prices or the global recession is the better thing. We need to watch that space. That's why diesel is not coming down as fast, because diesel drives the industries and factories and big cars that drive the economy. But it is also coming down. So what is the economy going to be like with a global recession, which some people are predicting will go all the way into 2024. So fuel prices may come down, but bigger things may also come down with it. That's really the uncertainty that has become our norm. Other people are celebrating inflation is now coming down, but it's really mentioned a very interesting thing. The wages have not gone up while the prices were going up. So even when the prices stop going up, it is the speed at which they are going up that is reducing. Not all prices are like fuel prices that they are coming down. Bread and sugar seems to still be where they were. The posho is still where it was last month, or at least for the last, I don't know how many months. Now that means for people whose wages have not gone up, the real power of that money has gone down. And that is a concern to us, that even as inflation comes down, the wage, real wage, which is the real power of the money that you put in your pocket, is still inadequate. Now, if I can't consume enough, even the large taxpayer is going to be bothered, because part of what he pays is VAT. That as I consume, he sells, he earns money, his company remains big and grows bigger. So it's going to be a very interesting conversation we're going to have this morning, and I want to invite the presenter of the Davos report, 2022 taxation of the high net worth individuals in Uganda. Do we even know them? But the report is coming. Let's just wait. Where is the presentation and the presenter? Are we ready, Mark? I want to mark you right or wrong. So please, until the presenter is here, my red pen is over the paper to see whether I put an X or a tick. I'm a teacher, by the way, so one of my duties is to mark people. And I tell them you can either earn the marks or you lose the marks. So I can begin marking from 0. As you earn, I add. Or I begin marking from 100. As you lose, I drop. So depending on where we meet, he's here. So I don't need to mark anybody. I hope people are doing the presentation visibilities. It's on? Okay. You have the floor and a green microphone. You can choose where you want to be. We will be watching you and seeing you from everywhere.
Good morning, everyone. My name is Rukundo Solomon. I'll be taking you through the presentation. Currently, I'm the tax manager at Grant Thornton, an audit firm. Prior to that, I was in Uganda Revenue Authority for 7 years. Yeah. So is the presentation showing? Oh, perfect. Okay. So at the World Economic Forum in Davos, Switzerland, where the world's richest meet, it took place recently, as we are all aware. So according to Oxfam, the richest 1% have grabbed nearly 2/3 of all the new wealth worth $42 trillion since 2020. That's almost twice as much as the bottom 99%. According to the World Bank, extreme poverty increased in 2020 for the first time in 25 years. At the same time, extreme wealth has risen dramatically since the pandemic. And further, World Bank predicts that its goal of ending extreme poverty by 2030 and global progress in reducing extreme poverty is unlikely to be achieved. So looking at the context in Uganda, many Ugandans live below the national poverty line. In 2019-2020, the population below the national poverty line reduced marginally to 20.3% from 21.4% in 2016-17. The absolute number of people living in poverty increased to 8.3 million in 2019-2020 from 8 million. Income inequality remains an issue in the country. The Gini coefficient was 0.42 in 2016-17 and stood at 0.41 in 2019-2020. The current tax system is largely regressive, or at least it does appear to be regressive because it's relying heavily on the indirect taxes. So indirect taxes are generally going to be regressive in nature. That's things like excise duty, VAT, because there's only if it's a consumption tax, there's only so much someone can consume. Whether you're super rich or very poor, there's only so much food, so much alcohol that you can consume. And if the tax rate on the same consumption item is the same, then in effect, the wealthier one is paying a smaller percentage of their income in tax than the poor person. So indirect taxes are inherently going to be regressive. Indirect taxes on goods and services account for 68% of the revenues, while personal income tax accounts for just a quarter of the revenues. Even the little personal income tax, mostly collected from employees, that contribute about 68% of the personal income tax. So even the bulk of personal income tax is not individuals voluntarily making payment, filing a return and making payment. Rather, it is employees where withholding is being done. So there is a lack of voluntary element there. The available research evidence suggests that Uganda's richest are contributing very little to tax revenues. Only 5% of the directors of the country's top tax-paying companies and fewer than 1/3 of the top 60 lawyers in the country were paying personal income tax in 2013-2014. That's an old study, but the information is still relevant, and there has probably been a bit of change in that, but not to our satisfaction. As a result, the poorest Ugandans are going without the support and infrastructure that they need to feed and clothe their families, or the education services they need to boost their future income and opportunities. Many health facilities are also still understaffed and under-resourced, and more than half of Ugandan women deliver their babies without a skilled birth attendant. Maternal mortality rates are among the highest in the world, estimated at 334 maternal rates per 100,000 live births in 2016 in Uganda. Poor women and girls and minorities pay the highest price as income and gender inequality, combined with the lack of services to push them to the bottom of the ladder. So that is the challenge that we have. That sets the context. What we're looking at is how then can we get more revenue from the high net worth individuals. The high net worth individual globally is an amorphous term. it is difficult to pin down a clear definition, and nor perhaps would one be necessarily desirable. Because in Uganda, when the high net worth individual unit was being set up, who to include would be tricky. You couldn't best say on how much tax someone is paying, because the problem we're trying to address is them not paying enough. So you're saying they should be paying more. So you can't just base on that. But you could try and look at certain indirect parameters. For example, shareholders of certain companies would likely have would be candidates for being included as high net worth individuals, ownership of certain properties and the like. So it is somewhat amorphous term that's difficult to pin down, but and that is not very strange in law. Famously, there is a case in the United States where the judge said that he cannot define obscenity or pornography, but he knows it when he sees it. So it could be the same thing with high net worth individuals. We may not always have the clear, definite definition, but you know one when you see one. So we look at the legal framework that we have in the current laws. So the main law that would be applicable for high net worth individuals is the Income Tax Act. And there are a number of provisions that have some bearing that can be used to look at to target the activities of the high net worth individuals. We have the charging provisions, the general anti-avoidance rules, the provisions relating to taxation of non-residents, and those dealing with offenses, penalties can be used as well. So the Income Tax Act charges tax on rental income separately. It's taxed separately from any other income, on business income, property income, and employment income. That's what they would call a scheduler system. So whatever you earn must fit into one of those. And if it doesn't fit into one of those, it may not be taxable. It may not be income as far as the act is concerned that is going to be subjected to tax. So we know rental income. It is income earned from renting out a property. And those individuals who are owning such properties would be subjected to that tax. We know business income. Engaging in active business of some commercial activity. Employment income, someone is an employee of another. And then property income, and that word is a bit problematic. I know it always brings a bit of confusion. Property income is very different from rental income. Property income is largely passive income. And in fact, I know there was even been a move there's a new income tax bill being drafted, and there's a move to change that word because the word always brings confusion. People confuse property income with rental income, and even other incomes, even business income. There's even a recent tax appeals tribunal decision where the tax appeals tribunal, who are very good, who are experts at tax, managed to conflate business income with property income because of the word property income. Because someone was selling a property. And when you sell a property, that's actually business income. But it is not property income. But the tax appeals tribunal actually said it was property income, which made no sense if you look at the flow of the act. So anyway, there are issues there. But property income is passive income. Interest, dividends, the income you earn while seated, doing almost nothing. It just comes and finds you. So all that is taxable, and that is largely, so the major ways people get money is covered by the law, by the tax law. Then there are provisions, anti-avoidance provisions, that are meant to prevent you from reducing your tax liability and just to enter into a business arrangement solely for the purpose of reducing your tax liability. An example is whereby you have two companies. One is making losses, the other is making profits, and you transfer the asset to the one making losses so that the income there can be buried, and you don't have to pay any tax. So things like that are being checked. The tax law prevents transactions like that, or allows the commissioner to recharacterize transactions like that. We also have the withholding tax on business assets. So a business asset is defined in the law as an asset held for use or ready for use in a business and any asset of a company or partnership. So it is, but trading stock is excluded, meaning that it is an asset which you use to generate income without selling it. You just keep using it. For example, machinery that you're having, for land, buildings that you have, that kind of thing would be what would look at as a business asset that is being used to generate. So when you sell a business asset, it is going to attract a withholding tax. That was introduced in 2019. Why that amendment, that provision is critical for targeting the high net worth is that, say, I take an example of a farm. A farm is a business asset. A commercial farm is a business asset. So when it is sold, there is tax due. Now, ordinarily, when you sell a business asset, capital gains tax is what is due and payable. That is if there is a gain, actually. But the complexity of capital gains tax in Uganda specifically is that the person who has sold the property and got the money is the one expected to account, but it may be harder to trace after the transaction has taken place. But the one who has bought the property is easy to trace because he owns the property. So when the withholding tax is placed on the one who is buying the property that they're supposed to withhold when they're making a payment to you, it means that even after the transaction has happened, URA can always now come after that at the end of the transaction and ask the person who bought it that why didn't you withhold on the sale of that property. So it's a means of targeting. It can be a useful means of targeting the high net worth individuals. Yeah, we have a self-assessment regime. The self-assessment regime means the taxpayer is one who voluntarily files their returns and they self-assess and determine how much tax they owe, and they submit it. The URA can audit going back 3 years under the law, but can also go beyond if in situations of fraud or new information, where the taxpayer, where no return has been filed, the commissioner can come up with an assessment. If you do not file a return, the commissioner comes up with an assessment. So where high net worth individuals have not been filing returns, the commissioner is empowered to come up with assessments. Then when tax becomes due, it is a debt owed to government and can be collected like any other debt. The way a private person can enforce debt is the same way the government can enforce its debt. So that includes things like distress proceedings, where they can take over your property and sell it or use it, and in order to generate the tax that you owe. It also includes the third-party agency notices. If you saw, I think it was a week ago, there was a clip moving around of Chiza Besige talking about URA going and collecting money from people's bank accounts, and so that's an example. The power does it. Interestingly, people were surprised that it exists. I think it's very difficult for any revenue authority to run without such a power at some point. You have to be able to exercise such a thing. The question is just how and when and whether the proper procedures are there in leading up to that. So the power does exist for if you owe tax, it is due, you've delayed to make payment, the URA can actually go and collect money from your bank account or anyone else who owes you money and is supposed to pay. You can pay the money to URA instead. Yeah, it's a helpful. No, it's an essential tool. You at the end of the day, and I'm speaking. I'm now on the other side. I've had to deal with agency notices, but you understand, it is a very essential tool. You have to have a power like that, and without it, what is the revenue authority doing? How is it going to collect ultimately when you have a recalcitrant and determined taxpayer who is going to ignore all the notices you send? At the end of the day, you just have to reach out and pick the money. So what we see is that we have a fairly robust legal system. We have the substantive laws imposing the tax. They are fairly adequate. We have some of the mechanisms in place for ease of administration, like the withholding tax. They are available. They are also fairly useful. Then we also have the procedures in case someone is resisting. We have the means of dealing with them. So if we have all this, then why are the high net worth individuals still an issue? So in 2015, this was done following a study in the URA. The high net worth individual unit was set up in the Public Sector Office, PSO. So the overall aim was to increase domestic revenue in the country. The units, the first people were put together were mainly directors of large companies and other individuals who were publicly known to be super wealthy. So it started with 117 individuals, and then also added on VIPs on top of the 113, rather than 17. And they were asked to meet with representatives of URA and other senior officers. So as I have understood it, how it was run, they used to send letters inviting you that you have been moved to this office. You can come and have a meeting. And for some of the high net worth individuals, I think at some point we will hear from those who are involved directly. They will tell us their direct experiences from the URA. But some of the high net worth individuals would take issue with who had written that letter. So, for example, if a manager or even an assistant commissioner, because the instance I'm aware of was an assistant commissioner, I think, or a commissioner who wrote, and the high net worth individual objected because it wasn't the commissioner general who wrote. So it was a sensitive way. You had to be very sensitive in dealing with them. But it may make sense, because if you're writing to the Chief Justice, if you're writing to the head of another institution, you may have to also, it may be the head of this institution. So it is things like that. And for the high net worth individual unit to function, they needed a lot of support, because you have to be careful with the language that appears in the letter, what you're saying to the person, how you're inviting them, and how they're going to respond. And they were dealing with those who were responding. Those where there was a positive response, they would go ahead and engage with them. But some of them, there would be a negative and hostile response. I know one story of the high net worth individual unit almost being forced into a pigsty when they visited a farm owned by an army general, and it almost made them enter a pigsty. So it was a bit tough. It was a bit tough for them. Yeah. So yeah. So in recognition of the fact that there were a number of politicians, the URA at one point approached the Electoral Commission ahead of the 2016 presidential elections to say that anyone standing for MP would be required to get a tax clearance certificate. However, the law didn't provide for that. The law only provides for presidential candidates, not for MPs. Although, again, even in 2020, URA said the same thing. And some people actually made an attempt to comply. It may be necessary to amend the law to require that, if that is to be done. It will be very difficult, I suspect, because you will be asking the very culprits themselves to be the ones to pass that law. The easier way might have been, or may be, not amending the tax statute, but amending the election statutes to put the requirement in the election statute, not the tax statute. Why? Because the election statute, the incumbents are probably okay with putting hurdles to potential opponents, and I suspect they will be open to it. So that may be a route to take, because it can't be that. In 2020, in fact, the Commissioner General claimed there was a directive from the EC, and a few days later, the EC came and disavowed that and said, no, we have not directed that there must be such a thing. Yeah. Yes, so there was also a specialized unit, the same unit in PSO, of high net worth individual unit, was also dealing with the VIPs, who were influential. We've talked about some of those, and in all countries really, wealth, being a wealthy person financial wealth translates into political power as well, inherently. It's just going to be linked. So there's going to be an overlap between the politically powerful and the uber wealthy. So they were being handled together, and it is not only in the sense that they are handled for purposes of extracting money from them, even for purposes of getting service from URA, they get a privilege. It is not well, one would call it a privilege, that if you have a tax or an office dedicated to you, it means when you have a challenge with URA, you easily go there. Whereas the ordinary hoi polloi, you may not know where to start. You just go there to the tower, they tell you your office is actually in Katwe. You go to Katwe, they tell you, no, this particular task has to be done on 4th floor. You go to 4th floor, they tell you we need a meeting with 18th floor first. Then, so you go through that. Whereas if you have a dedicated tax office, the officers there are like your client relationship managers. When you have a challenge, you just call them up, tell them I have this challenge, and they address it for you. So there is an incentive for someone to wish to be to be treated as a high net worth individual. It is not all just torture for them, if at all any torture. Yeah, so 239 individuals were originally there. There were some achievements. Some achievements have been registered. URA has collected up to 160 billion since 2015 from the people who are in that unit. I hear skepticism. Yes. So they are paying some money. Yeah, but yeah, we still have to do the work and get more. So there's been greater compliance. So we see more revenue coming from the same category of people. The social sectors such as agriculture, health, and the rest that are taking smaller portions of the budget now have a chance of being financed from the resources of the high net worth individuals. So in looking at what happened, what assessing the progress made so far, we see that the route to success was unconventional and involved both vertical and in-depth scaling. So some of the things I've talked about, it means you may have a high net worth individual whom an officer can call, another high net worth individual, it has to be the Commissioner General. You have to organize yourselves first. You may have a high net worth individual whose premises you can visit. Another one, having been almost forced into a pigsty, you may think twice about visiting those premises. Or you may need to go with some security before you visit. So it needs a flexible approach, top-down as well as horizontal, and support, multifaceted support from different segments of the authority, as well as support from the politicians. It started with a change in the institutional practice at URA, but then relied on many individually targeted approaches to encourage the wealthy taxpayers to comply with the existing laws. So URA had this broad approach, but then you make a tailored targeting to each person. So for example, you may have someone you've classified as high net worth individual, but they have made every effort to appear somewhat compliant. At least they may be filing the requisite returns, or maybe all their income is coming in the form of dividends and is already taxed by the company withholding. Then you have another one who is known to be wealthy but doesn't even have a TIN. Is not even registered. So the approaches are going to be different. The way you handle them is going to be different. The nudging in different directions is going to be different. And it was not simply a matter of rolling out a new initiative. The scale of impact was made possible by carefully altering behaviors, one person at a time, and facilitating this change in institutional practice. So as I pointed out earlier, there was the individualized, personalized communications to each of them as an individual, and dealing with them. And even as the unit got more and more experience, because the starting point, you may not even know what to do. They just put you there and you're in charge of this unit. How are you going to start? But as you deal with people and get pushback and see how you can navigate some of the different difficulties and complexities, they learned how to approach the different types of taxpayers differently. Yes, how the change happened. So to tax a segment of the population that is economically and politically influential requires support of high-ranking government officials and politicians. We've already seen that. You may need the Minister of Finance himself to be the one to show support directly when you are targeting certain persons. Civil society groups ran public campaigns, but also invested time in building relationships with government so that they can persuade it of the genuine value, so that there can be buy-in. They were able to get some buy-in, political buy-in from persons in government. So there are still new efforts targeting the high net worth. There was a proposal for a tax on inheritance that was made by the Commissioner General to a committee of parliament in 2020. There are the different versions that the tax can take. An inheritance tax is always tricky. In the United States, they have what they call it an estate tax, and it affects a handful of people, but it is still very, very controversial because there is something peculiar about going for someone's assets after they are dead, and especially now in the African setting. In the African setting, it may be harder. From the purist view of taxation, there is no problem with it. It's the classic for the economists. They will know the classic Haig-Simons definition of income is consumption plus change in net worth. So to the people who have remained, they have actually changed in net worth, and so taxing them, there is nothing wrong with that. But there are moral aspects. And a tax that is questionable like that, you'd have to think about how, not necessarily whether to introduce it, but how to design it in such a way that it only goes for those who are targeted. Also bearing in mind that certain things, once you open that door, closing them becomes difficult. Why I say this is because there was the tax on stamp duty on transfer from a deceased person, from the administrator to the beneficiaries. From the stamp duty on transfer from a deceased person to the administrator there was 15,000. It was nominal. There was no question. But then transfer from the administrator to the beneficiary was 1.5% of the estate. Now that would be okay when it is a sizable estate. But at some point, I worked in the stamp duty office for about 2 years. I used to do stamp duty, and the majority of the scenarios I encountered, you have a widow, you have children, it was not something you'd want to. And I because my background, I'm a lawyer. I used to help some of the people around there drafting contracts with people in the office to own a portion of their property in order to facilitate the transfer, because it was a bit expensive. So there is an actual challenge there of how you would implement such a tax. It may seem obvious at first glance, but the practical aspects, either you're going to limit it to a particular threshold, which is also, when you go down into how the Administrator General's office works, is very difficult to do. The succession law, that at the point of when someone has died, I can get letters of administration declaring the property I know at that time, meaning that I don't have to declare all the property, just the known one. And that those letters will still apply to the property that was not known. Because when someone dies, you may not know all the property that they own, so which is reasonable. So just pointing that out. Then the recent rental tax reform. The recent rental tax reform is also very useful for targeting individuals, high net worth individuals who earn rental income tax. Prior to 2021, there was the position was individuals would claim a deduction of 20%. You would not pay; it's not going to be part of your chargeable income. If you had the mortgage interest, you would claim that as a deduction, and then what remains is subjected to a tax rate of 20%. Then companies were taxed at 30% flat, but they could claim all their deductions. Now that meant if you had significant deductions, or if you could create significant deductions, it may incentivize you to own the property as a company. So an attempt was made to cure that in 2021. That somehow went awry. It took a different direction altogether and just became a blank period that most people at URA would probably rather not talk about what happened, because it was a strange phenomenon. The effective tax rate for individuals under the pre-2021 position, the effective tax rate is the percentage of your gross that you're paying. If you're earning 100 million, of that 100 million that comes in, some of it goes to expenses and whatnot, but before that, just the 100 million that comes in, what's the portion of it that's going to go to the Revenue Authority? The effective tax rate was about 16% before 2021. In the 2021 amendment, it became 7.5%. It fell down to half because of the way the amendment was done. Now, in 2022, that has been somewhat cured. It has been pushed up for individuals to 12%. It's a flat tax on gross. They have no deductions. So if you're an individual owning a rental property, you earn 100 million, there is the 2,835, 2,820 deduction for the threshold, but otherwise it's 12%, basically, 12% of what you get. And so it makes it easier. There is no, on the part of the authority at least, not on the part of the taxpayer. Then companies have an effective tax rate of 15%. Whatever income they get, just take it, 15% of it is going to be paid. So there is no need to move between individuals and companies, to shift the ownership. Once you're in rental, basically, the only questions URA has to ask itself now are, one, do you own rental property? If that is confirmed, then how much are you getting? Because determining income is always a lot easier than questioning an expenditure, which is what URA would have had to do before, which was very difficult, to go into whether the expenses you're claiming are legitimate. So more revenue is going to be raised, definitely, and high net worth individuals are going to pay, though arguably some not high net worth individuals who happen to own rentals are also going to suffer a little bit. Then there's a proposed alternative minimum tax. This is a bit of a controversial tax, depending on how you look at it. The proposal has morphed a little. I think it was first introduced in 2018, was introduced again in 2019, and then in 2020 as well. Each time it has been rejected by Parliament. What the proposal is that when you're declaring losses, at a certain point, you start paying taxes. So it's been 5 years at one point, then they proposed 7 years. The rate has always been a very low one, 0.5% thereabout. It's supposed to be that the losses being carried forward are not real normal losses as you would understand them, but tax losses. Someone is just pushing forward the tax losses, and at a certain point should start making some contribution. Even if you're in a loss position, make some small contribution, 0.5% of the gross, of your gross turnover. It is not a very strange tax as such. If you read the Hansard, whenever this tax comes up, one of the people to look out for is Honorable Nandala Mafavi. He just has fun taking it down, and he tears it apart, because he insists that to introduce this tax, you must introduce a new law called the Loss Tax Act, not the Income Tax Act, because as long as you're taxing income, you cannot tax someone who is making losses. But it's not as strange, and yes, it's portrayed that way, but it's not as strange as it may at first appear, because other jurisdictions have it. That shouldn't be the only justification, but other jurisdictions have it, including some fairly sophisticated ones like the United States. They have a version of it. Kenya has it. Tanzania has it. The one in Tanzania is even really brutal. It's the 3%. So it's not as unusual. It's meant to maybe the weakness of it is that when you get to the understanding of it, it seems more as an administrative convenience on the part of the tax authority, rather than say the justification of, say, we are targeting the high net worth. It is more of a bit of laziness on the part of the tax authority. We have failed to audit. We have failed to verify. Therefore, let us now just make you pay tax whether or not you actually owe something. So there is a challenge there, but it is an arguable position, and it is not a very strange tax as it has been portrayed. But it has been attempted 3 times so far and failed. But I know it will come back. It's going to come back. The current permanent secretary insists that there are no new tax measures. That's why it doesn't keep coming back. For last year, that was his position. This year, that's still his position. So when the new tax measures are allowed, it will probably come back. Then there was also a proposed withholding tax on sale of land. That was at 0.5%. This was on land which is not a business asset. Ordinary land, any land, basically. When it's being sold, the person buying should withhold 0.5%. That was also rejected outright, a land being considered somewhat sensitive. So we note that URA has expanded the high net worth individual unit significantly. The number of high net worth individuals has increased to 1,345 individuals. Staffing in the unit increased from 4 officers to 11. And the unit is now in the large taxpayers office. It moved from the public sector office to the large taxpayers office. The way forward, we consider there's a need to strengthen the technical capacity of URA staff for them to be able to inquire into high net worth individuals. They need to see what other jurisdictions are doing and mirror that, borrow what they can. Training should involve a mixture of the on-job training, short courses, and all geared towards that. A systemic and wide-ranging increase in taxation of the super rich as much as possible. This should be the general direction. So measures moving in that direction that target the rich should be welcomed. The government should work to close the loopholes that high net worth individuals are able to use, and this can be through the tax expenditure framework being developed. It's actually been developed, but implementing it, which is a very different question, whether it will actually be implemented. So if that is done, there can be ways of controlling the loopholes, and they do use the tax expenditures. When you look at the current thresholds for exemptions, they are ridiculously low for citizens. So anyone can get a 10-year tax exemption with ease. Then there are even those which are a bit, the only way you can describe them is bizarre. Bizarre in the implementation. When you're designing them, maybe having participated in designing some of them, I shouldn't question them so much. But when you're designing them, you think you know what you're doing. When it comes to implementation, they take a different route. For example, the exemption given on VAT for someone who who qualifies for those investor incentives is so wide. It's quite baffling. The exemption on stamp duty, you can actually strategize and dodge stamp duty that you would have paid. You can find a situation where, because you will get an exemption on stamp duty on, say, increase in share capital. Now you may want to increase your share capital by several $1 million. And so you just say you're going to invest $150,000, that's the threshold, $150,000 over a course of 3 or 4 years. You say, I will invest that, and then you can now transact. It means all the transactions of that company, they will not pay stamp duty. It doesn't, when you look at the implementation, it sort of doesn't make sense. So, and it's the high net worth who are taking advantage of that. Then, the government should collaborate with civil society and support the awareness campaigns and strengthen data collection and analysis so that more high net worth individuals can be detected and targeted as URA is supposed to do. Thank you very much. That was my presentation.
I think we could do with another clap for him. Thank you. He's really taken us through quite a number of things, and including those who thought they would collect tax from a general's home. Now, maybe they need to learn from their peers. I'm so closely associated with the banking sector, and I went out there to sign papers for increasing capital requirements for my bank, where I sit as a director. I won't tell you which one, because that may be marketing. But in the banking sector, we have those we call politically exposed persons. We don't lend money to them. Doesn't matter what project Mr. Museveni presents, I cannot lend money to him. And you know the line, it follows MK and all those fellows associated. You have ranks on the shoulders, not on the other side, no money for you, because I can never enforce. So please, tax people, learn to know your limits. Just like in the banking sector, we know our limits. You can even go with the enforcement teams, and they will all be disarmed and arrested, because the general can say, this is ADF trying to attack me on my farm. So these things are realities, and they're in our midst, and we're going to have a real conversation on these issues. We know the Trump taxes. Have you heard of Trump and his taxes? These are things we're talking about, net worth individuals. Some of them live out there. But I think one of the other key messages he has given to us, not just about the large taxpayers, even the small taxpayers, improving the relationship between the taxpayer and URA is very, very critical. Many times I receive emails I should never have received, and I'm like, you should have beeped me and I call you back and we discuss this. Because it's an issue that we can finish. Because it's even getting more complicated, that property income, business income, is it rental income? And what we say is actually rental income tax. Now, every time I'm driving around and I see rental places that are empty, I'm like, there is nothing to tax except the property. But even then you wonder whether you should tax that property because people have not paid. I know of people whose business is renting houses, but now they are really in a space of how do I push out this tenant who hasn't paid for 7 months? With a hope that the next tenant will pay. If I can vacate, if I can make the house available. But now what do you do for the 7 months? Did you earn any money? Should URA pay us for the times that the other fellows have not paid? I mean, it's very complicated. But there is an interesting thing here, that even as government builds the large taxpayers, some of them are being exempted by policy. And we're having this conversation with the Ministry of Finance. When you buy a government bond of 10 years and below, you pay tax of 20% on interest. Right? But if you buy a government bond of 10 years and above, the tax reduces to 10%. Now compare that with Jane, who starts a business and she pays 30%. So we're already even beginning to sort out that large net worth income earners by policy will pay less. Because who has bought government bonds? It is the wealthy. And see, because they don't need their money in the next 10 years, they buy that big bond of 20 years. And you're telling them they pay 10%. Now, a person is struggling to start a business, pig stay, you're saying you will pay 30%. I'm not surprised the general chased them. I would do the same. So some policy issues really are in our space, but this is not my day. The day is for the panelists. Panelists, please, why don't you come and walk forward? I want to save time. You know yourselves. Just walk forward. If you're not a panelist, you stay where you are. You will also have your day to be asked a question or to ask a question. Panelists, please come up here. We have 6 chairs, and you can feel free to extend the chairs, push them. Some of you can even stay where you are. You can speak from there, but let's first at least be seen. My panelists, I have 4 walking up here. Were you part of the panelists, Jen? Or you delegated the slot? Or you can speak from there? Very good. I think we can accommodate this. 5. Jane can come and have a chair wherever she wishes to be. Jane is one of the hosts. So the best thing is to have a host without a chair, because they can always find one. And indeed, she has. Thank you very much. Usually the first question, you don't ask such people questions. Look at them. What question do I ask them? They know what they are. The space. So the only question I can ask them, by the way, as I told you, I was reading somewhere, and I hope it wasn't true, but it is true. The overperformance of the tax the other quarter was because of VAT on imports. So we actually imported more than we had been doing. But as we did those imports, we ran down our reserves. I told you sometimes, watch out. Some good thing comes with bad things. So now we're allowing the dollar to go up so that we reduce on those imports to protect the reserves. But what happens to revenues? You can't have your cake and eat it. Economics never lies. The microphone is here with me, and I'm going to run it across. The first round is really, you tell us your name, you tell us what you do, so that people can know why you qualify to be on our panel. Then I'll move from the other side with the questions. Let's first run the microphone the other side. I didn't want to dare with the people's names for obvious reasons. They might have become Sejusa from Tinyafunza. Please proceed.
Thank you so much, Dr. James. My name is Joseph Okuja. I am a tax consultant, and I practice my trade with Libra advocates and consultants. Thank you.
Good morning. Once again, I'm Jen Narunga. I'm the Executive Director, Siatini, Uganda.
Good morning, comrades. My name is Musoke Thaddeus Nagenda, a Chairman, Kasita, Uganda, a businessman. Thank you.
Good morning. My name is John Walugembe, and I work with the Federation of SMEs.
Good morning, taxpayers. My name is Monica Tumukunde. I am supervisor in charge of high net worth at Uganda Revenue Authority. I'm actually the victim who went the pigsty.
Good morning. My name is Mwanje Dan Mambule. I've just joined the Ministry of Finance to support the implementation of the domestic revenue mobilization strategy at the Ministry of Finance in Tax Policy Department. So thank you so much.
Oh, before you give out the microphone, Dan Mwanje, we begin from there. Your 2 minutes or 3 minutes comment on what the subject matter is. You've had the presentation, you've been in the space. What do you want to add for us in 2-3 minutes? And that's going to come to all of us, and then we'll go back the other side.
Okay.
Now that we even have the evidence of the one who went to the...
Do you want me to come there?
Wherever you are, you can do it from there, I think.
Okay.
Unless you have a need for support of my...
I wanted to use that, but I can do it from here.
Oh, this guy might want you here. Is this recording? So this guy might actually want you here. Okay. The additional gadgets in the pilot's cockpit that you may need.
Okay. Yeah, thank you so much, moderator. We were asked as Minister of Finance to discuss how Uganda can formulate and forge a way forward towards taxing high net worth individuals to make the national tax system more equitable from a national policy perspective. I think I'm just going to spend about maybe a few minutes. We just put together just a simple statement. Like what we are actually trying to do so that we can see the high net worth individuals contributing their fair share, in taxes. Now, Uganda has formulated a domestic revenue mobilization strategy, and the core objective is to improve revenue collection, to lift Uganda's tax to GDP ratio to between 16 to 18%. That is by 2026-2027 financial year. Currently, the tax GDP is 13.4%, but if you include the grants, then it comes to 14.4% of GDP. So you can see we really have to work so hard to make sure that we move from 13.4% to at least 16%. But of course, it would be better to move to 18% so that government can have enough finances, enough resources to deliver the services that everybody is actually looking for. Now, the domestic revenue strategy has a number of interventions that would be implemented to achieve this objective. I would like to imagine many of you have maybe had a look at it. And of course, this includes making efforts to identify the currently untaxed economy and, to bring it into the tax net. And we have to say there are no obvious easy ways to achieve this, taxing, the untaxed economy. But efforts are being done to, of course, to tax them. And this includes the high net wealth individuals, because they are part of the untaxed economy. Now, taxing them, of course, as we've already seen, Mr. Rukund, of course, mentioned to us, and the madam is here. There's already a dedicated unit at URA that is focusing on these people. But the key challenge, and I think Rukund also mentioned it, there is yet no register of like all the, the potential and the real high net worth individuals. And partly because there's no clear definition or criterion that guides the determination of what makes one to qualify as a high net wealth individual. Nonetheless, of course, this is being worked on. Of course, I think we've had the numbers of how many, people are on that register. So work is going to continue, and even working on the law, to make sure that at least there is a definition that will guide URA on who to target. Secondly, of course, to be able to tax the high net worth individuals fairly, and we have to say that because I think when we read through the paper, it's like these rich, they have to be taxed. The richest have to be taxed. But I think Fred mentioned it. We don't need to overtax them. You only have to tax them fairly, because if you over-target them and then you kill them, you might actually dent the economy, because these are the guys who are really driving the economy. They are entrepreneurs, they are starting business, they're employing people. So we only want actually to tax them fairly, as because taxation is supposed to be fair. So not that we are targeting them so that, we kind of punish them because they are rich, but they're only supposed to pay a fair share of what they are supposed to pay. So there is a need to thoroughly study and understand their behaviors, economic behaviors. For instance, where do they invest? In real property? Are they investing, for instance, land, buildings, vehicles? Are they investing in shares? Are they investing in bonds, in factories, in other enterprises? Do they deposit money on bank accounts? Because, that would be really good, so that if they don't want to pay, then URA can go there and, pick some money so that the tax can be received. Where are they mostly located? In urban areas or rural areas, or both? And if both, what are the symbols of wealth to look out for? Commercial buildings, should you see a commercial building and then you think, I think the owner has to be a high net worth individual, high net worth individual? Is it coffee and banana plantations? If you have maybe a hectare of coffee plantation, then you must, belong there. Is it livestock? Is it large chunks of land? So in the ministry, this is where we want to focus on, so that we really understand the behaviors, of the high net worth individuals. Because unless actually you understand them well, then it would become quite difficult to tax them in a fair way. Then there is also the issue of the informal sector. Research has shown, that the informal sector has several potential or real, high net worth individuals that are hiding there, despite the sector being perceived to be for small enterprises and the unskilled. Some high net worth individuals are actually hiding in informality. So the DRMS has recommended various interventions to reduce informality in Uganda. And these interventions actually are being pursued to bring into the tax net some of the participants in the informal sector that should not be there. And this includes of course, the high net worth individuals. Of course, currently, measures are being put together to see how we can reduce informality and bring those people into the tax net so that we can collect more revenue. Of course, the other issue, and I think Rukundo touched on this, worldwide, the high net worth individuals are said to engage in aggressive tax planning. Of course, in Uganda, I think they are instead said to engage in aggressive tax evasion, not even just tax planning, but they just want to evade, because most do not want to pay taxes. And if they pay, then they grossly underdeclare their income. That is in the event that they filed their tax returns. Of course, the DRMS has catered for this aspect and recommended provision of thorough training to URA auditors to strengthen, of course, their expertise in auditing, to identify aggressive tax planning practices and to detect tax, of course, aggressive evasion that's being practiced by these individuals. There's also a recommendation to enhance data sharing within the country and also between countries as a way of countering domestic hidden economy, cross-border trade evasion, and illicit financial flows. So even these issues, of course, the domestic revenue mobilization strategy is really catering for them. And of course, the ministry is open to ideas, open to proposals, from the public. Not that the ministry knows it all, but we get views from outside there, that can actually help us to see or to know what we can do to increase, of course, the tax base and even increase the revenue collection. And we really welcome the proposals that have been presented by Rukundo. Of course, they've done a very good paper, and we are going to study them further to see how the high net worth individuals can be taxed. And I think I just want to touch just a few of them here, which we are actually trying to look at. Like there's a statement that the super rich derive most of their incomes from financial flows that arise from their ownership of assets like land, property, companies, and stocks. And I think the recommendation is that there should be progressive taxation of incomes of the wealthiest, their personal income, capital gains, and even unrealized capital gains. Of course, this would be a little bit tricky, the unrealized capital gains, but again, this is something I think we can really put our heads together and see how we can realize some money from there, some tax from there. Then taxing the fortunes of the rich through property tax, calculated on the basis of the value of property, land, and buildings. Of course, Rukundo has really told us property taxes, of course, they are there. I mentioned the land tax. I don't know, personally, maybe this would be something good if really the land tax can be supported. I think it would be something that would really bring in quite some good money. But I think these are things that we can always look at, that we can put our heads together and see what we can do. Quite a number of countries, I think Kenya has a land levy. I think Zimbabwe, they also have it. So maybe it's high time that Uganda can also start, thinking about some of those things. Of course, in America, land value tax is something which is actually generating a lot of money. Australia, they have it. Quite a number of countries in Europe. And I think these are, I would like to imagine, the rich, if you have, hectares of land, and sometimes it's like you're not doing anything on it. Maybe even a land value tax can actually help to incentivize you to make that land more productive. But these are my personal ideas, not for the ministry, but something that we can seriously think about. Then, of course, the inheritance tax that levied on the net value of all possessions transferred to someone else upon an individual's death. Rukundo mentioned it. It can be quite difficult to, I think, implement. Number 4, new wealth tax levied on total wealth accumulated by an individual based on the net value of all assets minus debts within the country or offshore, housing, bank deposits, corporate stocks, financial assets or tangible assets like jewelry, yachts. I don't know whether in Uganda we have people with those things, and then paintings. But these are things that actually we can think about, although some of them could be a little bit difficult. Then number 5, I think having public registries of beneficial owners. I think this is something which is required under the anti-money laundering and combating financial terrorism law. And I think you know that Uganda has been placed, I think, on a grey list, partly because of this. And I think these are some of the things that are supposed to be done to make sure that beneficial owners, people having, companies, but, they're hiding behind that. I think the law requires that, the actual owners, the beneficial owners, they have to be kind of published and they have to be known. So that is something that I think is also being done. Otherwise, if, of course, Uganda doesn't do it, then in the future, if like we move from the grey list to a black list, I think we know the consequences, transferring money from, from Uganda to another country, it will become quite difficult. So I think if this is implemented, I think it will really help us to know some of those high net worth individuals. Then there is also, I don't know whether this would be possible, creating a country asset register of all traditional types of wealth, including physical and financial assets, to connect and centralize asset identification. These are things that we are really going to study, and I think that would be really very, very important. And then make automatic exchange of information between countries so that we can know if somebody is maybe having a lot of money, maybe in Kenya or Swaziland or South Africa, then this information can actually expose them, and then the taxman, URA, can knock on their doors so that they can be made to contribute some money in taxes. And then to strengthen revenue administration capacity to monitor high-value transactions and property ownership, rental incomes or large loans in order to facilitate risk audits and compliance checks. I think this is already being done. And then to remove tax exemptions and loopholes in the tax system that primarily benefit the rich. I think Rukundo mentioned government has got a tax expenditures governance framework. The implementation has started. We are right now coming up with a tax expenditures monitoring framework, and we will definitely be preparing reports, I think on a quarterly basis. If you get a tax expenditure, then you have to know how are you utilizing this money, how are you contributing, because at the end of the day, it's an expenditure. It's like government has given you money to go and deliver a service on behalf of government. And so we have to monitor to make sure that all that is being done. And in case we find that, you are not contributing what you said, like the purpose of the tax expenditure is not being achieved, then of course there will be sunset clauses to say, then you cannot continue benefiting from that tax expenditure. So those things, at least that one is happening. I think Rukundo was kind of skeptic that maybe the implementation of the tax expenditure governance framework might not happen, but it's going to happen. It is business, maybe it's not business as usual. Things are changing, yes, especially under the new management. And I think lastly, to create a more transparent and inclusive tax policy making that removes the oversized influence of the rich, while creating a new space for meaningful participation by the many. Of course, this is why now the ministry actually welcomes proposals from everyone, not necessarily, the rich. Rukundo said, if you are rich, then it's like you have political power and you can influence so many things. Of course, they will continue doing that. They have good ideas that would be welcomed. But also, of course, anybody that would have views, of course, there will be a calendar that, a call for, tax proposals. And then people bring in their views, coming with a lot of information that can aid government to come up with good tax measures that would help the country to increase tax revenue. So I think in brief, Mr. Moderator, I think this is what we wanted to say from the Ministry of Finance. We thank you so much.
Thank you very much, Dan Mwanje, on behalf of the Ministry of Finance, but also on your own behalf, because you told us some of these were your views, and we are happy to engage them. I hope my audience in the room, you're writing out your own observations that you may want to share with us at a later time, or where you might need clarifications. That will be a welcome conversation. Just taking note of some few things as we continue with the conversation. That sometimes we look at big taxpayers. Are we protecting them? Because you might get to 2030 and they have also been dying off. We have seen big companies wind up and go. So we also want to protect that crop, our cherished big taxpayers. What are we doing to protect them? But also secondly, how do we intend to grow smaller to become bigger? Can we see some of those who are small? But also how do we harness big data? You know, mukene silverfish is a very small fish. But once you round up many of them, they become big taxpayers for your mouth to chew and feed the family. So can big data help us to bring all those small entities and be visible under one radar? To say all those who sell used clothes downtown, can they be on one platform so that we can see their transactions and they become one entity that we can hand at once? Quite a number of ideas coming through. I'm now tempted to jump from the other side, government next to government. There may not be necessarily a government, but they are para-government or semi-government. They are actually MDAs, as we call them, ministries, departments, and agencies. So why don't I swing this side, extreme side. Let's bring that microphone so that I can do Kasavu Kanyama in between there. You had something to say, I remember. Please.
Thank you so much. I don't really have organized thoughts on this particular subject, but I want to start by saying that today we are here talking about together against inequality. But I believe deep down we all know that we don't want to be equal. So inequality is not necessarily a bad thing. What is bad is unfair inequality. And how does unfair inequality come about? I want to suggest, and someone has said this before, that the poor evade taxes and the rich avoid. So if there is any person who evades taxes, like the moderator suggested, that person, in my view, is poor. The rich avoid taxes. Why? Because they are able to afford the services of tax planners like myself, who will guide them on how best to minimize the amount of taxes that they pay. Now, the study that has been done has dwelt so much on the income tax. The income tax is not designed to tax wealth. Okay? The income tax that we currently have is not designed to tax wealth of the so-called high net worth individuals. Why do I say so? Like the name suggests, income tax is a tax on income. And high net worth individuals do not rely on income to sustain themselves. They rely on value. So until we start thinking about taxing value, and in this case, value of assets, we are wasting time talking about taxing high net worth individuals. Income tax is a very easy tax to avoid. And there are two major ways in which income tax can be avoided. The first form is to shape the timing, the nature, and the amount of what you declare as taxable income. There are so many ways of doing that. And the high net worth individuals have mastered that skill through using tax planners to disguise the timing of their income, to disguise the nature of their income, and to disguise the amount that they actually declare for tax purposes. So setting up a high net worth tax unit in URA that is going after MPs. I don't know which other category of individuals are looking at, but I'm sure they are targeting public officials. Public officials are already being paid from taxes that have already been collected from the majority of taxpayers. So it is like getting money from one pocket and putting it into the other, and you think you are generating income. You are not generating income, okay? Because that money has already been collected, and it is from the consolidated fund that these individuals you are calling high net worth are actually being paid. So really, in my view, you are not generating any additional income from those particular individuals, because the high net worth individuals keep their money in investments. And if you look at the income tax currently as designed, investment income, which is passive income for most of the high net worth individuals, is taxed at a much lower rate than the ordinary income. If we talk about tax on interest, it's at 15%, okay? The moderator told us, treasury bills, 10 years and above, your tax is actually 10%. If it is, if the maturity period is below 10 years, you are paying 20%. And those are the people who are actually struggling to live and want to make some money. Dividends, the rate is 15%. Now, these are the areas where the so-called high net worth individuals invest their money, and they're earning income and paying tax at a much lower rate. So we may want to look at how to increase the rates of taxes applicable to passive income. Because the majority of us earn active income, you must actually work in order to earn. The rich do not have to work, their money works for them. And when your money is working for you, the tax law does not tax you adequately as compared to active income. So that is what we should be looking at. The other area, of course, that we can look at, we have talked about inheritance tax, but in my view, inheritance tax is problematic if it is explained in the way it has been explained, that you are trying to tax somebody upon their death. We should not be looking at taxing somebody upon their death. We should be looking at taxing value. Because what happens is the rich are able to invest in assets, and these assets gain value over the years. The rich do not sell their assets. They pass it on to their children and grandchildren. And when these assets are passed on under the income tax, we do not tax gifts. We do not tax inheritance. And when that is done, value is being passed from one generation to another, and the inequality we are talking about is going to remain. So what we should be doing is considering taxing value. Because you buy a plot of land today at 1 million shillings, 5 years down the road, the value has jumped up to 50 million. As long as I do not sell that land, I will never pay tax on that value that has gained. When I transfer it to my children, they will never pay tax because I have not sold the land. The tax, the income tax, will only tax you when that land is sold and I have derived income. So we must find ways of taxing value. But the challenge with that, of course, is that it requires that we must have a department in government that is able to undertake valuations on an annual basis and say that land in this particular area over a period of 1 year has increased by a value of X factors. And therefore, the individuals who own those pieces of land are assessed to tax based on that value so that they pay it when they are still alive. If you wait until they are dead, they are going to pass it on to their children, who will now realize an asset whose value at the time the father or mother acquired it was 1 million shillings, but by the time it passes on to me, that's after 50 years, the value is 1 billion shillings. And I'm not going to pay tax on that value because I have inherited the land. But if this individual was being taxed on an annual basis, based on the value of that land as it appreciates, then we would realize more taxes from these so-called high net worth individuals because they keep their assets, rather their value in assets. And you know it for a fact that most of the individuals we think are high net worth, they are not surviving on income. No, they are surviving on loans. Okay? And why are they surviving on loans? They are able to stake their assets as collateral in order to get loans from banks. And when the banks give them the loans, they are able to spend it without paying a single amount in taxes. Why? Because loans are not considered income under the income tax law. Okay? So they are benefiting. You see them living a very high lifestyle, but it is all on loans. And why are they taking loans? It's not because they want to. They are avoiding tax. Because if they sold the assets, then URA would come after them for capital gains tax. They will never sell those assets. But you'll put the asset in the bank will give you 10 billion shillings, and you're able to spend it as much as you want. Why? Because you have an asset that tomorrow the bank can take over, as opposed to you selling it. But then you have got the money to spend it as you like. So if we are to really talk about taxing the high net worth individuals, we have to talk about either introducing a law on wealth tax or reforming the current income tax to deem certain transactions as being transactions that have given rise to income. And that can be done by just amending a few provisions in the Income Tax Act so that you are able to realize tax at the current rate without having to wait until either somebody dies or until somebody sells an asset, because now, if you do not sell, you do not pay any taxes. So those are the comments I wanted to make. But before I conclude, I was also thinking about this whole scheme of trying to sell the idea of taxing the high net worth individuals. How can that be achieved? What kind of arguments are you going to make? Because the people who pass the laws are the people we now consider high net worth, the politicians in Uganda. In actual sense, they are not. But the rich have captured the politics of this country, and they're the ones who make the decisions. So how are we going to be able to sell the idea that actually we need to be taxing these individuals more? The MPs already exempted themselves from paying tax. So what chance do you have to introduce new taxes or higher taxes on these so-called high net worth individuals? I want to suggest that we can make the case for inequality if we can show that the rich have become rich because of unfair means. They have become rich because the state favors them. They have become rich because the tax law allows them to become rich. And that is where the unfairness is. So remove the unfairness in the tax law, remove the unfairness in the award of contracts, remove the unfairness in the way these rich people interact with the economy. Then you'll be able to tax the rich in a fair manner and probably make a case that these particular individuals should actually pay more tax because they have become who they are, either because the state has favored them. Of course, these days you have seen the videos that have come around. There was that individual who was a thief, who was arrested, and his defense was that he's a Munyankole. And therefore he cannot be a thief. Okay? So what was he suggesting? He was suggesting that if you are a Munyankole, the system favors you in such a way that you are able to accumulate wealth or income better than others who are not Banyankole. So if the system is actually favoring certain individuals, and we can start with the tax law, there are so many incentives that only the rich can benefit from. Let's start by getting rid of those incentives, such that the playing ground is level. Okay? We all know very well that in this country, certain positions are reserved for certain people. Those are the people who are accumulating wealth. So how do we deal with the unfairness in the system so as to be able to tax these so-called net worth individuals who are riding on the backs of other individuals, rather other citizens of this country, and are not paying the fair share of their taxes? Otherwise, on the whole, there is nothing wrong with inequality if I have fairly become rich as a result of my hard work, as opposed to being favored by the system. Thank you.
think now you notice why lawyers and economists and accountants and business people need to be in some spaces. We used to debate who should be in URA, and I've had, he's not here, but we can always carry the message. People keep asking me, what is Mr. Kagwa doing in the Ministry of Finance? Mr. Kagwa is a lawyer. But you can see, before you do the law, Dan Mwanje told us, understand what people are doing with their monies. Understand the business. I was doing my simple calculation here, as we said earlier. The rich are really surviving on different things. Their net worth, they are not workers. They are playing golf even now as we speak. They are on the golf course. Their lunch is going to come from Serena, and they are not bothered. Because if I have 10 billion shillings and come here and do a portion of Kabira, URA will be on my case to check on a few things. But if I put my 10 billion shillings in a government bond of 20 years, the other month people got 18%, call it 17%. So every year I have my 17% out of the 10 billion, that is 1.7 billion. Why shouldn't I play golf? The tax is 10% of the 1.7 billion. That's 170 million. So 170 million out of 10 billion is 1.7% tax. I can give it to you, and I remain with 1.5 billion. In a year, what do you do with 1.5 billion? You go to Hawaii for a holiday while you guys are working and paying taxes. Mr. Kuja has really raised interesting issues on who should we be taxing. I have seen actually, and I told you I'm in the banking space, some of the people, the best collateral now is a government bond. So some of these people have actually bought government bonds, brought that evidence to a bank as collateral. So now they live on the bank loans, which are not taxable because it's a loan. So I think we have work to do within our own space. And I liked what you said. The poor do what? If there is those who have evade, there are those who avoid. And that's why consumption taxes, to us, were a good way to tax. Because if I'm taxing soda, you have an option not to take the soda. That's what we thought it should be. That's why consumption taxes are not supposed to be regressive. Because even if you are drinking, how many sodas can you drink? Fine, you'll drink one and the rich man will drink one. But the rich man has capacity to hold a party. So that's why we're looking, saying, even if he drinks one like others, he's going to hold a party and bring a truck. So he will pay more taxes. But now you see, he has even left us to tax the soda and is living on loans. It's very interesting understanding the economics before you tax. Jane, I'm not coming to you. Honorable Thaddeus, why don't you bring in your submission at this point? You want to do it there, you want to come, but there's some other gadgets here. The pilot seat is here, and people want to see you, and all the cameras are here. I hope you edit the wrong things I say about a project that may lead me to a pigsty.
Thank you very much. I want to thank the organizers. This has been a very great engagement and very tricky, seriously. Because we are aware in Uganda, compliance is not at the level we would have wished to be. As we in the business community, we decided to see how can we promote compliance. So I've liked some of the presenters. They have highlighted some of the vital information. For example, when I was engaging some of our members who are dealing in second-hand cars, and we are trying to process a facility to facilitate them for economic recovery, I discovered that majority of them, they don't have TIN numbers. And when I asked, then how do you try to carry out business? They told me, you cannot believe that even within a month, they can sell like 200 millions just for simple old second-hand cars. So the fact is that they were benefiting a lot not to comply, not to formalize. So I think with such a great engagement, formalization strategy which the Ministry of Finance is championing, and then URA, will do a very vital role in trying to tax the high net worthy individuals. And then where somehow I'm differing from my comrade who has presented here about the high net worth individuals and avoiding taxes using loans. I don't know. I've tried to access loans, but what I've discovered in Uganda that the loans are very expensive. So even if you avoid paying taxes and then you hide in the disguise of acquiring a loan, when I was trying to acquire a 100 million loan, I spent over 6 million. So it's so expensive, minus the rate. Even there are so a lot of requirements which are required. So what I think, formalization, when we formalize in businesses, we can clearly identify these individuals. That's why I like the presenter who highlighted that this informal sector individuals, they're becoming rich, even they are enjoying more benefits even than those comrades whom we think they are rich. Because basing on our survey, we have discovered that most of the comrades we think they are rich, by the way, they are so broke. They are very poor. When we try to engage some of our members here in Kampala, you're finding that the banks are confiscating their security. They're auctioning them. Then that one is a very broke gentleman. If you are rich, we think that already you can meet your obligation. I don't think that there is any individual who would wish his asset to be auctioned. So with such engagements, it will enrich the reports to the Minister of Finance before implementation. We should not rush with implementing such policies. Because even one time when I was listening to some presenters, I thought that, can't this policy also encourage people we are trying to build the capacity of Ugandan business community. And you find now the economy is almost all in the hands of foreigners. You look at the banks, you look at the majority of industries, now in real estates. So how can we cater for these Ugandans who want to become rich? How can the tax regime be fair? Can't it discourage them to be fair? And we think that when rich, you are living a very good life. So all of us here, we want to be rich. But can't this policy, if it's not carefully handled, can't it discourage Ugandans and become lazy? So we think that there is a lot which needs to be done, more research and more information, because it's a very sensitive topic. And then one time I was getting an interview and I told one of the journalists who was interviewing me that, the mafias are in the business community. Because a businessman will do whatever it takes to stay in business. And then I said, are you serious that mafias also now in business community? They thought that mafias are supposed to be only in government. But the fact is that the business community has a lot of influence in policy formation and even in parliament. One time we were trying to pursue the rental tax. We made these good proposals. When we left, the MP's president said, Kasita, you have made good presentations. But when the bill was passed, whatever we presented was trashed. Unfortunately, whatever we are opposing is in that tax. So this is not that act. So we are dealing with a very sensitive and very influential team, which I think with the good ideas which are being brought forward, it can assist the government to raise taxes. I got so happy when one time I was engaging the musicians. They're saying, Kasita, you are just keeping quiet. You are not assisting us with this war we are in with URA. I told you that's not a war. You are Ugandan, so you are supposed to meet your obligations because if you can hire a musician, 10 millions, just to sing on a CD, and then he pockets all that money, doesn't pay income tax, and then you are finding that they are seriously gaining property, driving very expensive cars, and then you don't want to pay taxes. So identifying untaxed sources and individuals, that's a very brilliant idea, I think, which the Ministry of Finance is trying to implement. But my concern is about taxing property. Because you find that most of Ugandans, you struggle a lot in even getting a couple lot of 100 to 50. Even some try to acquire those plots through loans. And then when I get a couple lot, already the loan is so expensive. I want to put something little like the rentals, and then the rentals are taxed. And then you're saying even property is supposed to be highly taxed. So somehow, it may affect Ugandans to discourage them to acquire property, and which we have been pushing as Kasita, because in order to invest in Uganda, you're supposed to have now large volumes of capital, which you cannot access easily in Uganda unless you have security, which you can present to the banks. So we thought that people can utilize the assets to invest in some of even the priority programs which the government is championing, like import substitution, like agro-business, which we think can add more value to the income of this country. Thank you. I submit.
Thank you very much, Honorable Thaddeus Msoke, for a practical touch of what happens downtown. I think we have really a challenge of tracking what people go through, and as we said, those trying to climb up the ladder, sometimes you want to let them climb the ladder so that they can become visible, and then you can tax them even better, more conveniently, and when they can actually afford to pay, as long as they don't disappear. So there are a lot of learnings this morning as we get into our afternoon. I want to invite Mr. John Walugembe, you come and make a submission, and then I'm running a risk of ending up with the ladies, which is a good thing. I want to end up with the one in charge of this high net worth, so you're definitely going to come last for obvious reasons.
Thank you. I'll start by saying that this is a difficult conversation. There was a civil servant who was appointed, and when she got the job, she was so zealous. She wanted to show the boss that she had a new innovation. So before very many people, she suggested, why don't we bring lifestyle audits? You see? And then all of us were saying, yeah, I think this is smart. And then she was guided that, you see, when you bring these things, they may do more harm. They may cause the thieves to take the money out of the country. So as a general disclaimer, we want to go after the rich people, but we don't want to push them out so that they take their loot outside the country, particularly for those that have gotten it that way. Secondly, no country has really managed to use this route, this kind of progressive taxation, to redistribute wealth successfully. Why? Some of the reasons he mentioned. You know, you are asking the market to burn down the forest. So that becomes extremely difficult. So the excuse has been the informal sector is not paying tax. The informal sector is not paying tax. And everyone is parroting the same kind of thing. Now, we are saying that 68% of our taxes are indirect, meaning they are consumption taxes. So it means that as you consume, you pay. So now when you say the informal sector are not paying tax, then you're talking about something different. You're talking about direct taxes, you're talking about corporate tax and things of the sort. And, you know, that's an entirely different kind of discussion. But looking at our trajectory, I don't see us shifting from indirect to direct taxes, in spite of their weaknesses. Now, in our context, when we talk about high net worth individuals, there are not many. And as